Good morning, good afternoon, good evening. I'd like to welcome everyone to the joint IAASB, IESBA CAG session. For today, we're going to welcome both IAASB and IESBA CAG reps. Also like to recognize our official observers, and that includes Barb Manich and Lillian Sinoa of PCAOB, George Kambaiwe of IMF, and Don McGreechy of SMPAG. We also have a PIOB observer, and that is Dr. Chen. Welcome, Dr. Chen. And I'd like to welcome our IESBA and IAASB members, including Stavros Tomadakis, the IESBA chair, and Tom Stevenson, the IAASB chair. Also, we have Caroline Lee, Lynn Dewey of Caroline Lee of IESBA, Lynn Dewey of IAASB, Mike Ashley of IESBA, and Willie Botha will be sitting in for Josephine Jackson of the IAASB working group. And in terms of staff, we have James Gunn, who is the Managing Director of Professional Standards, Ken Song, who is IESBA Senior Technical Director, and Willie Botha, who is IAASA Technical Director. And I know most of you were on the call yesterday, but just a couple reminders for having this Zoom meeting. One is, if you're not speaking, please be sure you mute your phone. Secondly, if you would like to speak, please be sure you raise your hand. And the raise hand function within Zoom is now under reactions. And once you've been called upon, please then lower your hand so we know that you do not have any further comments. And with that, I think what's very important for our meeting this morning is that we hear from everyone. It's a very important topic, and I very much hope that everyone contributes. So I will pass it on to my colleague, Galen Hansen. Galen?
Thank you, Jim. So the last joint session that we had of the CAG was about a year ago in our September meeting when we discussed again the definition of listed entities and PIEs, and the exposure draft that was issued in January of 2021 after that gained 69 comment letters, and that comment period ended in May. So today what you're going to have is a presentation about the key issues that were raised by those respondents to the ED and the proposed revisions to that text. You'll also get an update on the work of the IAASB PI working group, which was established in May of this year. So there's been very close coordination between the two boards since the start of this project. The exposure draft included a question, in fact, addressed to matters specific to the IAASB, for example, to get some feedback on how the proposed changes to the code might affect pronouncements in the auditing standards of the IAASB. So subject to the IESBA's board discussion, which is scheduled for next week, the task force is looking to getting final approval of this standard for approval in December of this year. So with that sort of background, I'd like to introduce our presenter today, Mike Ashley, who is the IESBA PI Task Force Chair and also an IESBA member. And also Willie Botha on the IAASB side, who's, as you know, is the technical director. I'll turn it over to those two, Mike and Willie, to go forward at that time, and then we'll have an opportunity to weigh in. Mike? Willie?
Thanks, Galen, and thanks for the introduction. And I'm afraid you're going to have to listen to me for most of the time, and Willie will contribute the bits in connection with the IAASB as we come to them. Two very quick apologies in advance, if I may. If my internet connection falls over, it will probably take me a little while to get back in again, because I don't have many alternatives. Probably means going back to the phone. And my wife has gone out this morning, which means if I get any visitors, which I'm not expecting, the dog will let loose and I will have to go break off very quickly to go and deal with it, as Galen already knows. So I've done it once this morning already. But at least the postman now won't call because he's been. So with that, and without further ado, if we can make a start, flick over to the next slide. I am going to go through the slides relatively quickly. I think everyone's had them in advance. And I certainly won't dwell on any which are, if you like, more background material. Having said that, if anyone has any observations, obviously feel free to chip in at any stage. We will pause for questions after each of the main sort of responses and proposals. And as you can see there, what we're looking for today is to close off views on the overarching objective, the broad approach, what we've done with publicly traded entity and the other pie categories, the suggestions around role of firms, and effective date. As Galen said, this is really the last opportunity for the CAGs to weigh in on this. I would encourage you, if you have views, to put them in. Certainly, I'm afraid I tend to interpret silence as agreement. So if I don't hear from anyone, I will just continue to plough our merry way. So if we can go on to the next slide, just very quick background there. And we're now obviously in the period of looking at the comments. As Galen said, we got a good range of comments. We go on to the next one. Just to recap, the key proposals in the ED were to introduce an overarching objective, i.e. why were we looking to have additional independence requirements for entities that are pies. That in turn led to potentially providing guidance on the factors that might be considered when determining the level of public interest in an entity. We look to expand the extant definition to a broad list of pies, which we would look to refine at a local jurisdictional level. We look to replace the term listed entity with a new pie category of publicly traded entity to capture the increasing numbers of new types of market that are out there. We looked to elevate the extant application material that encouraged firms to determine whether to treat additional entities as pies to a requirement. And lastly, we were looking to require firms to disclose if an audit client has been treated as a pie. In terms of the IAASB, so if you go on to the next slide, we also sought some preliminary views from the IAASB stakeholders on those matters which would affect the IAASB standards, potentially the use of a common overarching objective, thinking about how that might apply in terms of what is currently in the IAASB standards for listed entities, and should it be more broadly applied to other pie categories, and how might that be looked at, and disclosure within the auditor's report that the firm has treated an entity as a pie. And Willie will discuss those and where his task force is on that as we go through it. If you look at the next slide, the breakdown by respondents, I hesitate to say it was the usual culprits, but needless to say, there was much more interest in this from those more directly affected, i.e. the PAOs, national standard setters, the firms, and some of the other regulatory type bodies. Very little response from investors. So in terms of going on to the substance of the presentation, if we go on to the overarching objective, I think there was strong support for trying to have an overarching objective and general agreement, I think, as to how we had expressed it. There were a few suggestions that we might extend it to non-financial information, but not a great deal. The key comments were that we should clarify the meaning of financial condition in paragraph 400.8 and how we might ensure that referring to enhancing confidence in the audit financial statements didn't mean we had different levels of independence and audit quality for pie and non-pie audits, simply that we had different requirements which demonstrated, if you like, the achievement of those requirements. And there was general support for the proposed list of factors for assessing the level of public interest. If we flick over to the next slide, and Willie, if you'd like to come in on this.
Yes, thank you, Mike, and good morning, good afternoon, and good evening, everyone. So as Mike has indicated, there were three questions in the explanatory memorandum that was part of our initial information gathering and research for a possible project on the implications of these proposals for the IAASB standards. We do anticipate that such a project will only be a narrow scope project where we will do targeted changes to those affected standards. So the first question was around the overarching objective, and that was in the EM, that was question 15A. And from respondents, we had broad support for a common overarching objective to be used by both boards. We did have a discussion with the IAASB in July, and during that discussion, the IAASB agreed on the approach that was proposed by our PI working group that was established in May. And that approach really refers to the fact that a common objective as the one proposed in paragraph 400.8 could be used by both boards in terms of being used for introducing differential requirements in the IAASB standards for entities where there's significant public interest and heightened expectations of stakeholders. But we also propose that this objective may need to be tailored to focus on the outcome of such differential requirements for our standards, because obviously for the ethics code, the outcome is very much focused on auditing independence, while in the IAASB standards, the focus would be on engagement quality. So we might need to tailor that and the list of factors and so on for specifically for the IAASB purposes. Thank you, Mike.
Thanks. If we can flick on to the next slide. So in response to the comments that we've received, what the task force is proposing is that we do retain the focus on financial condition of an entity. We are going to keep the term financial condition, or we're proposing to, because we think, frankly, it's as good as anything that you might come up with in terms of articulating what we are getting at, which is slightly wider than the financial statements. But bearing in mind that auditors are all about financial statements, it's obviously heavily rooted therein. So we've added a comment which says here, it's due to the potential impact of financial well-being on stakeholders to, if you like, try and explain what we mean by the term a bit better, which hopefully will meet people's requirements. And as I say, we do think it is a broadly understood term, so we think it's as good a term as any. And we have clarified how the financial statements actually can be used by stakeholders when assessing the financial condition of entities. It's not the only thing they use. They don't necessarily always use it, but we have clarified they can be used. We've tried to get away from this perception of two levels of independence or audit quality. So we've actually removed the reference to enhancing confidence, and we've gone back to something which is in some of the more recently published IESBA standards, in particular around NAS, talking about the stakeholders' heightened expectations regarding independence of PI auditors because of that public interest. And we've also moved the list of factors to a new paragraph, 400.9, which I think makes it easier for the IAASB to look at 400.8 as a standalone and make that as a more suitable as a possible common objective by both boards. We're not, however, proposing any revisions to that list of factors. So the revisions we are making, if you go on to the next slide, are in 400.8 and 400.10, which I don't tend to read out because you can read as well as I can. And what I would like to ask at this stage is for any comments on our various recommendations in this area. So over to you.
Yeah. Yes. So if you want to raise your hand, if you have anything on this for the task force. Okay, and I see Klaus Norberg. You have the floor, Klaus.
Yeah, hello. Thank you for this very good presentation, which I think is very helpful. I know that also it's not the easiest task you have before you to try to come up with a revised standard for on a global scale, defining what a pi is and also the implications for the IESBA code on this. So I do recognize there are some challenges there. But back to the first question here, regarding the formulation of 400.8 on the focus of public interest on the financial condition, I do agree. I think it's wise to focus on that. And I also agree that I think it's wise to have a common overarching objective, both the IESBA and the IAASB, in establishing requirements for the code and also for ISO standards. However, which I will come back to, I do have concerns about the differences that might be encountered in the IESBA code and also in the ISO standards regarding audits of PIs, but I can come back to that later. But just to sum up, I'm okay with the focus on financial condition. Thanks.
Thank you, Klaus. And then I see Paul Munter. Paul? There you go.
Yeah, thank you, Galen. I have a question for Willie on the slide that he covered. I know we're going to talk about the LCE proposal tomorrow, but I was trying to sort out in my mind what intersection there would be, if any, between the scope for the LCE standard vis-a-vis a definition of PIE. So if you all have given that any thought, I would be very interested in understanding your thinking on that.
Mike, do you want to continue or?
Why doesn't we ask Willie if he wants to respond to that one?
Yeah, okay.
Specific.
No, I'm happy to respond to that one. So Paul, you asked specifically about the intersection between this work and the definition of pi for the LCE standard. Remember what we did when we designed the LCE, developed the LCE standard, is the LCE standard does not address pies per se. What we were trying to do is we were trying to define which are those entities that represent that would represent complex matters and circumstances. And that standard, that LCE standard, is not designed for entities where there are complex matters and circumstances. And we distinguish that by certain specific exclusions, as well as when entities have certain qualitative characteristics. Now, in that we at the moment we were excluding listed entities and a list of entities in terms of those that would normally exhibit those type of characteristics. We did indicate in the ED that when we get the feedback from the ED, where we specifically ask questions about the authority of the standard, we will obviously consider how the final revisions to the IESBA code would affect the authority of the LCE standard. For example, I'm sure that Mike will touch on this, that there are two categories which they were originally in the PI, within the PI categories that they are going to exclude. We've included those in our list in the PI in the LCE standard. We will consider whether it is appropriate to exclude those, because remember, we have excluded those entities for the reasons linked to complexity and whether those entities give rise to complex matters or circumstances. But we did clearly highlight in the ED that we will obviously have regard to the final version of the proposals of the ethics board. Thank you, Paul. Thank you, Mike.
So I see Paul Thompson.
Thanks, Galen, and thanks, Mike. Actually, I had a question and an observation. The question has already been asked by Paul Munter and expertly answered by Willie, so I won't pick up on that. I guess my only observation, and this is not to say that I disagree with the approach that we've got here, this focus on financial condition and financial statements, except to say that, you know, over the coming few years, we stand to see a rapid emergence of sustainability reporting and assurance thereon. so I think we just got to be have that back of mind as we go forward. You know, given I've seen, for example, recent reports issued by the International Federation of Accountants and also by the American Institute, CPA, flagging up how often now you can find assurance being provided on the sustainability or non-financial, the ESG, whatever you want to call it, reporting of larger companies. You know, I do feel that 5 years from now we could be in a very different place as regards financial reporting and sustainability reporting. Such as to say that sustainability reporting might become almost as important as financial reporting very soon. That's all.
Thank you, Paul. And I see Conchita, you have your hand up.
Thank you. Let me just say that generally, I agree on the definition. I go for a broad one, the one being proposed, which is a practical matter. Now, I support having focus on financial condition of the entity instead of financial statements. And I would like to elaborate further following what Paul said. I believe professional accountants are also being asked to do some sort of assurance work with regards to ESG compliance or whatever. The thing there is there are no standards of reporting on that. And as a follow through to what Paul said, perhaps this is one thing that the standard setters should look at. I will even venture that we don't have to wait for 5 years, as mentioned, because the reporting is already ongoing and standards of reporting seem to be lagging behind. And the third thing that I would like to cite is I agree to keep the transparency requirement with focus on disclosure, zeroing in on independence. I believe the team has done a good job. I'm just citing some insights that may be useful. Thank you.
Thank you, Conchita. Mike, I don't see any other hands if you wanted to address any of those comments.
Yeah, if I could just address the one on sustainability, where I have a lot of sympathy, but I think we've got to start thinking about what are both the reporting requirements for those who opine on sustainability, who may be professional accountants or may not be. We've got to start thinking, I think, about what independent standards we want to apply to them as a broad issue before we start thinking about, well, which of the ones need to be treated as public interest entities. And whilst there may obviously, because pies as defined at the moment, when the focus on financial condition do tend to capture the largest companies, and therefore there may well be some overlap with those which are felt to be pies from a sustainability perspective as well. I don't think it's necessarily the same, and the criteria aren't the same. So that's a long way of saying I think there is something to be addressed there. I'm very happy to say it should be addressed in the future because I come off the IESBA board at the end of this year, so I'm leaving the problem to somebody else. But I think it's a bigger project than just defining pies.
So,
okay.
Mike, yeah.
Sorry, Galen, did you want me to go on? Or
No, so yeah, I don't see any other hands raised, Mike. So if you wanted to proceed.
Okay. If we can flick over the next slide, because that was just the questions, and we've done that. So the next bit, if you go on to the next one, next slide. Next slide.
Yeah, can we go to slide 12?
perhaps the slide operator has dropped a, oh, there we go.
There we go.
Right. So in terms of actually our approach, and you remember we classified this as a broad approach versus a narrow approach. I wouldn't get too hung up on those terms. It was just a way of distinguishing the two. But we were going for what we described as a broad approach to revising the PI definition, which was to set out some very broad categories which inevitably required refinement at a local level. On balance, there was more overall support for the broad approach, including very satisfying a number of the independent national standard setters and indeed developing jurisdictions who would be probably required to do a lot of the heavy lifting in terms of the local work that would be required as a result of this approach. And there was definitely support, which we had sort of indicated in the explanatory memorandum, that we understood the concerns about inconsistency, local body capacity, etc. So we are committed through IFAC to do more on education outreach, additional guidance, as well as monitoring how this is implemented. Whilst there was that more overall support for the broad approach, there was a significant proportion who preferred a narrow approach, but they tended to define that as baseline definitions, and it included IOSCO, and I'll come on to their views in a minute because we had a follow-on conversation with them, and a number of respondents from the EU, but needless to say the EU were very keen that we adopted the EU definitions, which if you read them are very heavily rooted in EU legislation and then adapted by even the jurisdictions within the EU to fit within their local legislative requirements. So we felt that, frankly, that was not a practical way forward for a global code. The concerns of the broad approach were very much the same sort of concerns we heard from the ones who supported the broad approach, i.e. with there being consistency of treatment, it was dependent on local bodies' ability and appetite to make refinements. There was a concern, and this probably is how it came about because of how we perhaps expressed it in the original ED, there's a risk of allowing local bodies to exclude an entire category. I don't think you can even now rule that out. What we have tried to do with the words we've chosen is to make it much less likely. And there was a challenge that where there were existing very legally rooted PI definitions, particularly in the EU, that it would be difficult because people were not accustomed to changing those. So as I say, there was a preference for baseline definitions, but outside of listed entity, the task force didn't feel it was practical to come up with any baseline definitions. Go on to the next slide. Obviously, for those who did support the broad approach, there was support for the local bodies to be able to refine it. Obviously, they need to have the ability to add, which we felt was fairly explicit, but we try to make it even more explicit. And a concern the number of PIs in a jurisdiction need to remain reasonable and manageable, but that is one reason why, frankly, we think it's very incumbent on local jurisdictions to evaluate that. Defining something as a PI is not a zero cost option. It does require additional requirements to be implemented. So it is always a balancing act between capturing those things you think deserve to be captured and not sweeping up a whole load of things that don't. There were some queries about how to deal with group situations, which will, to the extent those persist, we'll try and deal with in Q&A. My personal view is I don't think it's particularly different to the situation today where you may have more than one set of independent standards required to be applied to a particular entity. And obviously in the context of a group, you may have different independent standards for different parts of an entity. So going on to the next piece, which is how we have then approached it, we have retained the broad approach. So we're going with an expanded PI list with that high level definition. And we recognize that there was a significant level of support received for that broad approach in our meeting with the IOSCO. IOSCO did acknowledge that may be because they were too focused in terms of listed entities in their initial response. And they certainly accepted the way we were going did not necessarily mean there was a fatal flaw in what we were doing. There was a concern they had about deleting listed, and we will come on to that. But we have also sought to address that. As I said, I don't think we felt that a narrow approach with baseline definitions could be practically achieved. And indeed, there is a level of inconsistency which already exists. And what we're trying to do with this project actually reduce that by setting out a framework, by setting out criteria, by embarking on an education process, which hopefully will steer local jurisdictions to go in the same direction. In terms of going on to the next slide, so the role of local bodies, what we have done is we've more explicitly tried to address the concern about excluding an entire category by deleting the phrase that we had in there. I don't think that means they couldn't, because I don't think we can tell them they can't, but hopefully it makes it less likely that they would. And there are other things we've done which I think will also make it less likely they will exclude wholesale categories. We do acknowledge there may be challenges in jurisdictions with existing robust legal definitions, and we have sought to address that as well, which I'll come on to when we actually look at the categories that we're now including. And at that point, I was just going to pause and ask for any reactions to the recommendation that we continue to go down the road of starting with a board approach, which will inevitably require refinement at a local level to be properly operable.
And I see Klaus has raised his hand. Klaus?
Yeah, thanks. To answer your basic question about the broad approach, I'm in the camp where I would have preferred to retain a narrow definition of it as a matter of principle. And we'll come back then to how to try to work it out in the next steps, the next question to come. But just to make sure that my principal position is known. My main concern out of this is the impact of this, that you might have different scope here in the IESBA code for independence requirements versus auditing requirements coming from the ISO standards. So that is my big concern. If you take it from a company standpoint, I think it's very confusing to say at the one hand, with the broadened definition, might say that those are the independence requirements that will be applied. But at the same time, you could end up in a situation where you don't apply the ISO standards requirements based on the audit of a PI. So I think that's a big concern. And my question is that, have you thought about making any kind of impact assessment of this outcome and also taking into consideration what the IAASB is doing on this? Because I think this is a major issue for companies and other entities that are also affected by this. Thanks.
Mike, should we take a few more?
Yeah, makes sense.
All right, let's go to Hilda. Hilda?
Thank you, Galen, and good morning, good afternoon, good evening, good night, maybe to all of you. I think the words that Mike said in his introduction of this part, let's not get too hung up on this broad or narrow approach resonates with me, because originally, we would have also, like Klaas, Norberg have supported the narrow approach. But if we look at the outcome of the work that you have done and the PIE definition that you actually come up with and how you have actually worded it, it doesn't seem to make a huge difference at this point in time. So I think overall we are supportive of the direction in which you're going.
Thanks, Hilda. Paul Sobel.
Thank you, and welcome to everybody. I think I want to kind of echo the last comments. I commend the working group because I think you listened closely to the vast array of comments and feedback that came back. And I actually think this is a pretty elegant solution. I personally like the broader approach. I think it gives for more flexibility at a local level in the future. And I know we will get into the definition shortly, but I just wanted to throw my support behind the direction. I think it's going to work well.
Thank you, Paul. Wei Ming.
Thanks, Galen. Good day, everyone. Thanks a lot for the work has been done by the task force, and thanks a lot for the presentation. I appreciate the task force effort in incorporating the comments from various stakeholders in defining the PIE. From the perspective of capital market stakeholders, I'm pleased to see the task force proposal to include the phrase listed on a stock exchange and recognizing listed entity as defined by relevant securities law or regulation. By incorporating listed entity in the definition will help reduce the confusion when apply PIE definition and promote more orderly adoption of the PIE definition. I encourage the task force continue to be open-minded and to the views to the capital market regulators and stakeholders. That's all. Thank you.
Thank you, Wei. Mike, would you like to respond at this point? Yeah.
Why don't we keep going with a few?
Okay.
I can only see 3 at the moment, and
Okay.
some of those I suspect are going to raise similar issues. So.
Okay. Asha Mubarak.
Hi. Hello.
You have the floor.
Okay. Thank you for the presentation. I just want to give an opinion on regulators' perspective. We also find with the broad approach for the project to proceed, but there is one concern we want to know whether how easily we could add on to the like the PIEs to be in line with the code. You see, we have a legal act which specifies who the PIEs are. So some of which have been actually covered in the proposed code as well. So I think we need a lot of guidance on that. I was also particularly interested in the point you mentioned relating to the role of the local bodies, where the number of PIEs in each jurisdiction should be a manageable one. So this is also in line with the views of some of the international audit regulators we have had discussions with. So as a result of those discussions and studies, we are now in the process of amending our act with regard to narrowing down who should be considered as the PIEs. So I want to tell that this project is very relevant to us, and I believe for the other regulators and all the stakeholders. Thank you.
Hussein Yurtiko.
Okay, thank you. Hi to everyone. I want to raise one issue, minor issue. Actually, narrow scope is, I'm fine with narrow scope, but for the public interest entity category D, an entity specified as such by law, regulation, or professional standard. Yeah, in general, especially in regulatory area, regulatory body determine the public interest companies, entities, for example, listed entities, banks or insurance companies and other entities. I think generally this determination based on the factor counted on paragraph 409, but some entities may be out of these determined not directly related with this factor. Therefore, I think this issue should considered, in my opinion, whenever regulator consider an entity as a public interest entity, whether based on the factor counted on that paragraph, I think it should be public interest entity, and audit of this entity should be during the audit of this entity, all part of code should be applied. Thank you very much.
Thank you, Hussein. And Hyson Sela. Hyson?
Yes, thank you. Thank you, Galen. And really, it was a very good presentation. And we agree with this broad approach in treating the revised definition of public interest. And this is important because across various jurisdictions, you have to consider also some thing that is relevant. For example, when it comes to those that are not big companies, but small and medium size or less complex entities, and having this broad approach, and also having other additional guidance for this will help, especially local bodies, to consider for this kind of categorizing of public interest. And so we support this broad approach. Is a very good one. Thank you.
Thank you, Hyson. And I see Natasha Leno Mills.
Yes, thank you. And thank you for the presentation. And also just apologies, I've been having a few techie issues, hence my video's off, and I also miss bits and pieces of the presentation, I'm afraid, Mike. But I just want to echo the previous comment, because I guess one of the things that strikes me as odd is, it's really not the IASB's role to be deciding what a public interest entity is. That's a government. And I realize that there are different jurisdictions and different approaches, but, I would have thought just simply saying where it is so defined, then, that would be applicable. And then I suppose a follow-on question to that is where there are discrepancies, so where within a particular jurisdiction, an entity would be considered public interest according to the local laws, but not so under these standards, then what happens? Thank you.
Thank you, Natasha. Mike, I don't have any other hands raised at the moment. There's a few raised, but I think they've already spoken. Would you like to weigh in?
Yes, and perhaps if I deal with the sort of interplay between legal requirements and others. I have to say, and just picking up Natasha's last point, one thought that did occur to me when I started down the road of the task force was, should we actually just say a public interest entity is what a local jurisdiction defines it to be? And if they define it to be a public interest entity, these are the consequences and these are the standards you have to apply. I think on reflection, and the reason we didn't go down that road is because we do think that it is appropriate, if we're trying to set standards which have some sort of global acceptability and global consistency, that we try and lead the witness a bit. And frankly, that is what this tries to do with the broad approach. It tries to, and also with the overarching objective, it tries to help local authorities, and that could be PAOs, it could be legislators, depending upon the jurisdiction, it could be regulatory bodies, but it tries to set a framework for them and give them some steers, if you like, as to what we had in mind as regarding public interest entity when we set the standards that we felt should be applied to it. And that was, if you like, really all the objective is. And clearly, if somebody has defined a PI, and a PI in this context, we've tried to say, well, just because a country uses the term public interest entity, if it's not being applied in the context of financial auditing, financial reporting, that doesn't necessarily make it one just for this purpose. But certainly if they have defined something as a public interest entity in the context of financial accounts, financial reporting, auditing, then yes, that prevails. I mean, we've made that very clear. The definition still has that inclusion. And we would expect local bodies to add potentially to the categories, the broad categories that we are going to end up with. So that's the first bit, I think, in terms of how we see that the PAO's role and the legal role. So clearly, if you've got a legal definition, you start with that. In most countries, not absolutely all, PAOs have been known to add categories over and above what the legal definition is. And that's clearly something, if they are permitted to do so in that country, is open to them still to do. And that would also then bite in those countries. But as I say, what we've really tried to do with this is to lead the witness. Coming back to the original question on that Klaus had in terms of the confusion that might be sown with the interplay between the IAASB and IESBA, and I might ask Willie to comment as well, but clearly we do need to be liaising still closely with IAASB as we bring this project to fruition. And the IAASB approach the enhanced requirements they tend to have in their standards from two perspectives. One is the public interest entity per se perspective, although that's largely down to listed entities. And the other one, as Willie outlined earlier, is a focus on audit quality, which may be driven by complexity almost as much as or in addition to the public interest in the entity itself. But Willie, I don't know if you want to comment about how you see this working out.
Thank you, Mike. And actually that comes to the matter that is addressed a little bit further on in the slides around our proposed case-by-case approach for the IAASB to consider the implications of the final proposals from the Ethics Board for the IAASB standards. Because what we need to remember is that as it stands today, the only differential requirements we have in the IAASB standards are certain requirements that apply to listed entities. So there are certain requirements in the IAASB standards that are designed to apply to listed entities. We don't use the term PI at all in our standards. For those requirements, we have application material that indicates that it may be appropriate to apply some of those requirements that have been designed to apply to a listed entity more broadly to other entities that exhibit characteristics that give rise to public interest issues similar to that of listed entities. To Mike's point, those differential requirements that we currently have in our standards only affect communication with those charged with governance and certain statements in the auditor's report, except for one, and that is to do with engagement quality reviews under ISQ 1. But again, the engagement quality reviewer, the work of the engagement quality reviewer does not contribute to the auditor's audit evidence as a basis to express an audit opinion. So all those differential requirements in the IAASB standards does not affect the actual audit effort in terms of obtaining audit evidence to form a reasonable assurance, to obtain reasonable assurance as a basis for the auditor's opinion. When we discussed this with our board in July, there were also members that said that when we look at this in terms of the IAASB standards, we should also be careful that there's not a proliferation of differential requirements in the IAASB standards. We need to be very careful because many differential requirements in the IAASB standards may create complexity, and that would not be in the public interest. Thank you, Mike.
Thanks. I think Natasha's got her hand raised. I don't know if that's coming back on a different point or coming back on the same point.
Yeah, may I, just because it's sort of word, it goes with the flow, if you like. So that's very helpful. I guess I would just come back on one point for clarity purposes, because I think it's actually really, really important. I think you said something around, you know, you can have a public interest entity, but then, you know, apply from through a different lens than through the financial statement lens. And I think, you know, my perspective would be, if you have an entity that's of public interest, then their financials are of public interest. And I find it hard to understand where those two would diverge. I think that's sort of the point. If it's a public interest entity, then really their financials need to be treated with that higher level of scrutiny, if you like. But I think your core point, Mike, if I understood correctly, is either way, the law takes precedent. So if it's a public interest entity in the local jurisdictions, the high standards would apply. Is that correct, just to reassure me?
Effectively, yes. And I mean, I hate to try and come up with an example of where I think you could have something that was of public interest, but the financial statements wouldn't be. But it would be in areas where, if you like, the rationale for the public interest was not driven by anything which appeared in their financial statements.
But the point, I think the point is, if the entities are public interest, then their financial condition, their solvency, their viability, all of those things are definitely in the public interest. So
I think it depends what drives the public interest, and whether, if you take away, you know, if they became financially in difficulties, would that actually affect the public interest in them or not? And we can take this offline if you like, but I'm sure I can manufacture an example if I try hard enough.
I wouldn't try too hard, but yeah.
But I think it's rare. I agree with that. But I wouldn't want to rule out the possibility.
But my second point is correct, which is that in the local's jurisdiction, if that's been labelled public interest,
If they've done it with that objective in mind, yes. Yeah, very much so.
That sounded slightly qualified to me, but maybe we could take this offline. Thank you.
Mike, I don't see any other hands if you wanted to go forward.
Okay, let's keep going then. So if we can go on to the next one. So looking at then the first of our definitions for PI definition, where we've replaced listed entity with publicly traded entity, there was a lot of support for that. People felt that it did allow us to capture more markets than just the traditional listed stock exchanges. There was some suggestions about providing some more clarity and refinement to the term, although again, I would stress we are expecting that local bodies would refine the term. It is deliberately quite a broad category. So there were some requests, for example, should we indicate what level of trading was required, etc. I don't think that is something which it's practical to do in a global code, but is something that potentially local regulators could take into account in thinking about which markets or which companies in which markets they seek to define as PIs for their own purposes. It was suggested that listed entities should be considered as a sort of subcategory of publicly traded under the new term. There was a suggestion we should align with the EU definition, but again, I think it's difficult to align with any one jurisdiction's definitions. And as I said, it says there, IOSCA and a few others referred to retain listed entity as a well-used term, but in the discussions we had with them, certainly they were comfortable, if we can go on to the next slide, that providing we kept the term listed entity within the context of publicly traded entities, that may well largely address their issues. So that is really covering what there is with listed entities. Willie, did you just want to comment about the IAASB's perspective on this one?
Yeah, I think if we can go to the next slide, then so this was the second question that was included in the explanatory memorandum, and as I actually indicated in my earlier response to a question, is that we asked respondents whether they agree with the IAASB's proposed case-by-case approach in the project on our side to consider whether existing differential requirements in the IAASB standards should be applied to listed, the differential requirements we presently have that applies to listed entities, whether those should be broadly applied to all PIs. So respondents overall supported that approach, and when we discussed this with the IAASB in July, again, the board also supported the task force continuing with this approach in terms of the existing requirements, and also flagged that there is also application material within the standards that we will also have to have a look at. But then when we also look at that application material, we just need to be careful and circumspect, not to overcomplicate it or to over-engineer any revisions on the IAASB side. The discussion that Mike just alluded to in terms of the publicly traded entities versus listed entities, that discussion we've not had with our board yet, because at the point in July, the IESBA task force have only done preliminary analysis of the responses. So we will have a more fulsome discussion on that with our board in October. That would obviously be a very key discussion for the exact reason that I explained earlier, that at the moment we have a listed entity definition in the IAASB standards, and our differential requirements at the moment only applies to listed entities. So it will be important for us how we will frame this for our exposure draft and solicit input from our stakeholders in terms of how to take this forward. Thank you, Mike.
Thanks. So if we can go on to the next slide, and really this sets out what the current task force thinking is. So we are proposing to retain the term publicly traded entity. As I said, it received quite wide support. We have defined it very slightly differently. We've replaced publicly traded with traded through a publicly accessible market mechanism, again, to try and ensure that it is fairly broad. And we have indicated that it would include through listing on a stock exchange. So that hopefully allows the linkage through to listing that IOSCO was looking for. As far as financial instrument is concerned, and that there was again broad support for ensuring that we tried to capture all forms of tradable financial instrument. Some concern about definition. Certainly a number of people, including IOSCO, did not think that the IESBA board should try and define financial instrument in yet another way. So we did look at the IAASB's definition, which is in IAS 32. Rather unhelpfully, they define a financial instrument as a contract which evidences a financial asset or a financial liability, and then go on for another page and a half to explain what they mean by a financial asset and a financial liability, which frankly we didn't think was suitable for replicating in the IESBA glossary verbatim. We did consider whether you do a cross-reference to IAS 32 or you cross-reference to applicable financial reporting framework. On balance, I think where the task force is at the moment, what we are going to ask the board at our next meeting, and I'd be interested in any views on this, is we think it is given that we are looking for local jurisdictions to define if they feel the need to refine the definitions that we have, we think financial instrument is a well enough generally accepted, understood term that we do not need to define it. But again, I would be interested in views.
I think you're calling for some reaction to that, and I see Klaus has raised his hand.
Yes, thank you. Yeah, going back to the previous question where I state my position in principle. Okay, now having accepted that you have chosen the broad approach to go here, also now introducing the term publicly traded entity, I would be supportive of your approach here to say that a listed entity is an example of a publicly traded entity. So I think that I do understand the challenge you have here by broadening the scope while at the same time try to give some help. So I think it's a good way to do that. So just to be clear, that if you will go this way, I will be supportive of that approach. Regarding the issue about financial instruments, I would also concur with your observation that we should not try to define what a financial instrument is. As you alluded to, I don't think that a reference to IAS 32, which is drafted for different purposes and a different perspective, is very helpful in your approach here. And you might also raise the question why a definition would be needed, given that you start out by saying that if you have a publicly traded entity, you would assume that the marketplace, or whatever you would call it, also would have its own, listing requirements or definition or an explanation, as also goes with local legislation or local regulations in order to define, so to say, what kind of instrument is then traded. So a definition would only be needed, I think, if to cut away something that might be traded as a commodity or something like that, would you clearly feel should not be within the scope of what you would think could be a publicly traded entity with a financial instrument. Thank you.
Thank you, Klaus. And I just looking at the time, we've got about a half hour left. So I would ask people to be very, very close to the point, because we still have quite a few slides to get through. Hilda, Conchita, you're up next, please.
Thank you. I go by the suggestion of the task force. Just one clear supporting statement. What is being developed is addressed to people who are not really zero on information or knowledge about publicly traded entity and financial instruments. So I don't see the need to further define those words, because you're dealing with people with baseline knowledge about these things, and the standards are there to guide them. So that's all. Thank you.
Thank you, Conchita. And Hilda?
Thank you. Very quickly, I fully agree with Klaas and also with Conchita. No need for a definition. It is mostly clear also in national or regional jurisdiction. So a pointer to refer to that should be enough. Thank you.
Thanks, Hilda. And Paul Sobel?
Yeah, and again, I think in my previous comments, I expressed support for the direction things were heading definitionally. The one question I had, and maybe it's out of scope here, I was thinking about financial interests and financial instruments and wondering, what happens if you have a cryptocurrency company? Now, granted, if they're publicly traded, then I think it's covered. If not, I could see in the future where, cryptocurrency traders, market makers, et cetera, might slip into that public interest realm. So again, maybe that's too far out in the future to think about, but I wasn't sure whether the current definitions had contemplated such a company.
Thank you, Paul. And Mike, I don't see any other hands right now, but I think that cryptocurrency thing did come up with the task force, didn't it?
Well, we asked a specific question about whether or not that aspect and sort of new sort of initial coin offerings and things like that ought to be things we should explicitly try and capture. And I think the sense we got almost universally was that no, we should let the markets evolve. And if we were being fairly broad in our approach, to the extent that they are issuing things which start to become, quotes, publicly traded, hopefully our definition is broad enough that with the appropriate refinement locally, it will capture the things it needs to capture as those markets develop. So I fully agree with Paul. It is an area which may evolve. I think at the moment it's not got to the level whereby you have got massive tradings in things which are either equity or debt of particular companies that would be reflected in their accounts, such that, if you like, you could look at their financial accounts to get a sense of what it is you own is worth. But as I say, that may well evolve. If we can keep going then. So if we can go on to the next slide, which is then probably the last, well, no, there's a couple of other substantive bits, but this is another big one to make sure we get views on. Generally, though, people were supportive of the categories we had. The strongest support was for A, B, and C, which is basically shorthand for listed entities, banks, and insurers, although somewhat more broadly expressed in the way we had done. There was least overall support for D, which was post-employment, which I think reflected, as much as anything else, people's concerns about the wide spectrum of entities that might get caught by that definition. And similarly with E. And I think that if I sum up, the concerns were two or threefold. One was, given that the IESBA code applies to the forum of firms, in the event that local jurisdictions do not better refine and define the various categories we have, then they have to live with the ones as we've defined it, which are very broad and would almost certainly capture an awful lot of things that nobody in their right mind would regard as being of public interest, probably because they were too small, or they were operating in a very narrow space, or whatever. And the biggest concerns, I think, were around D and E in that respect. And I think, as much as anything else, therefore, the concern was to ensure that what we came up with would be operable, even in those cases, which hopefully will be rare, because I do think there is a general enthusiasm for local bodies adopting this, although it tends to be harder in those which are almost entirely legally driven, as opposed to where the PAO sets any level of standard. But I think it was definitely D and E that were within that sort of concern bucket. And then there was a few suggestions, but very few suggestions for additional categories. And as I said just now, very little support for adding in categories to deal with ICOs and other such things. So if we flip over to the next slide in terms of what the TF is proposing, we are proposing to keep B and C. We are proposing to remove D and E. As I said, because I think they would scope in significantly more entities than B and C that are very small with only a small number of stakeholders. I think that given that this is a largely untried and untested model of whereby we set a broad set of categorizations and expect local bodies to refine it, it de-risks that strategy, if I'm honest. We do note that a number of jurisdictions have included elements of these categories where it is appropriate already. So forcing everyone to try and think about it, I think it's arguable how much additional entities would in the event actually get captured when local jurisdictions did the job anyway, i.e. the ones who really feel that it is important in their jurisdiction have already done something about it. And we are therefore proposing to go down that road, but I would be interested in views. And sorry, the last thing was that because of the concern about removing those two categories, whether we would expand the application material paragraph we've got, which talks about local bodies adding, whether we would actually include some examples of entities they might like to consider. And these would obviously be two. But views.
Mike, I think you're calling for some feedback at this point.
Yeah.
And I'll say that I do support the changes that are reflected there. On B, I've always wondered whether the reference to deposits is specific enough to, I know what we're talking about here, but you know, there's a lot of different types of deposits, and I wonder whether that's too broad. And I know that question has come up before, but I'll go to our raised hands, and Klaus is first again.
Oh, thanks. Be very short. I agree with the task force proposals on this point. Thanks.
Thank you, Klaus. And Natasha?
Yeah, I'm afraid I'm not going to be quite so short, but I'll try to be succinct. Yeah, I guess I would say, well, what about F? I guess that it mirrors my comments earlier. I think it does at least, so correct me if I'm wrong. And then you'll, of course, be well aware of the UK's white paper proposals around the extension of the definition of PIE. And there, the idea is to deal with this question of whether it's too small an entity by setting sort of thresholds in terms of the number of employees or turnover. So it'd be interesting to know whether the task force considered that, because I think if that's the issue, if the size question is the issue, then that is one mechanism for tackling it. Of course, keeping in mind at the end of the day that what we want is to ensure that level of independence that is so vital to protect stakeholder interests. Thank you.
I see Hilda has her hand up. Hilda?
Very quickly, thank you. We're fully supportive of the proposals to change as it is proposed now. And in addition to the last comment, in the EU, that's basically the definition we have. And I can assure you, in a lot of member states where appropriate, the PIE definition has been extended to include additional categories. And some of those are the ones in D, E, F, and even others.
Thank you, Hilda. Mike, I don't see any others.
Yeah, if I can just respond to Natasha, we've hesitated generally in the code and certainly in this space to try and deal with anything in terms of setting size, because that is so jurisdictional dependent in our view. What is considered large in one country is not considered large in another, and it depends very much on the effect within the economic environment of whatever jurisdiction it is you're talking about. So I agree with you, that's the way local jurisdictions would be expected to deal with it, and indeed deal with it even as far as banks are concerned. And if you take the view that, quotes, all banks should be PIEs, that is not the view that's been taken in the EU, where the definition of bank would include credit unions, and largely, and occasionally by size reference, but largely generally, credit unions have been excluded. So there are reasons for excluding entities even if the broad definition might otherwise capture them.
Yes, and the second part of my question then becomes relevant, which is that then you defer to the locus jurisdictional definition, which is the F point,
Yes.
which I don't see here.
Yes.
So where did
Sorry,
F
F is still continues. Sorry, when it says we're retaining B and C and removing D and E, we hadn't mentioned F simply because we weren't proposing to do anything with F, but and F is effectively in the extant code.
Okay, thank you.
So yes, that continues.
Mike, I don't see any other hands.
Okay, if we can go on to the next slide. So there were two elements of the firm role of firms that we had. One was, as I said, we had suggested elevating the application material to being a requirement and to think about whether to treat additional entities as pies. There was a lot of pushback on that. Not entirely unsurprising. Most of that came from the firms. The PAOs were rather split in their views. Most regulators were supportive. I think there was concern about, again, we're taking a new model. It's going to take time to implement. Therefore, the firms are then having another burden to start having to think about whether they add things. If the local jurisdictions do their job properly, is it going to amount to adding a great deal? So is building it into a requirement actually on a cost benefit basis worthwhile? And general concern about dealing with that. So that was the first one. The second one was transparency, where again, the response pattern was that most of the regulators, sorry, you go on to the next slide, most of the regulators were supportive, quite a lot of the firms were not. There was concern about confusion of the term, i.e. treated as a pie. And I think this also obviously then feeds into the IAASB's issue about whether everything we say should be a pie from an independence perspective is also, quotes, a pie in terms of how they would apply the standards, given, as we've already discussed, they only apply differential standards at the moment to listeds. So if I can just go on to the next slide and just discuss what we're proposing to do about it. Having reflected long and hard on it, we have determined that it would be appropriate to go back to having it as being encouragement to the firm to think about applying independence requirements. We've made it much more, we've reworded it, so it's different from the extant material, but it's going back to being an application material rather than a requirement. And we have asked, and we have also continued with including the factors that we had. There was general support for those factors if a firm was going to think about adding something as a pie anyway. We have proposed we retain the transparency requirement, although what we again with this one have done is we have reworded it so as it's focused very clearly on applying the independence requirements. And the way I look at this simplistically, from you may say, but from my own perspective, I think it's important that stakeholders understand that when an auditor is claiming to be independent, they understand by what standards that independence has been measured. And therefore, it is not sufficient just to say that it is by reference to the IESBA code, because the IESBA code has in effect two sets of standards, one for pies and one for non-pies. And therefore, to be completely transparent, that's about what standard a firm has applied. We believe it is appropriate for them to be explicit when they have applied the pie requirements. Implicitly, therefore, if they don't say they have, they haven't. So we're not requiring them to say they've applied non-pie requirements, but we are requiring them to say if in those events that they have applied the pie requirements and to make public disclosure of that. So that is what is the current proposal. Sorry, if you go on to the next slide, I've probably explained most of this already. So in terms of the overall rationale, if we keep the transparency requirement, we think that if there are those rare occasions when something should be treated as a pie and a firm has failed to do so, sorry, not treated as a pie, whether it should be the independence standard that should be applied should be the pie level of independence. and they have not done so, then it will be obvious to read to the public that they have not done so. And therefore, we believe that that actually meets overall the public interest. Otherwise, I think I cover most of the rest of the bits on this slide. So happy at that point to pass over to Willie.
Thank you, Mike. So if we can move to the next slide, thank you. So this was the last question the IAASB had. So in addition to the two questions that Mike referred to on the transparency requirement that was proposed in the ED, we sought from our stakeholders input on whether our stakeholders, well, the respondents to the ED believed that it would be appropriate to disclose in the auditor's report that the firm has been treated as a PI. And as you can imagine, there was a high level of consistency between the answers to question 15C and the transparency, the questions around the transparency requirements in the ED. The respondents to the questions, there wasn't majority support for the disclosure in the auditor's report, but we need to remember that that was in the context of the proposal that was in the ED around whether an entity, disclosing whether an entity was treated as a PI. And as Mike has explained, the task force has obviously moved on from that position. The respondents flagged a number of concerns that are reflected on the slide. Some respondents did indicate that if the ethics board is to go ahead with a transparency requirement, then they would be supportive of such disclosure in the auditor's report. So we discussed this with our board at the July meeting as well. And generally, our board was supportive of the IAASB PI working group exploring transparency in the auditor's report as part of a possible narrow scope project for the implications on the IAASB standards, which would obviously mean we will have to go through our own due process and present those proposals to our stakeholders and get input on whether the auditor's report is a suitable location for such disclosure and how this may be accomplished. That would mean that we would have to present the extant requirement in 700 paragraph 28C that we have today that Mike also alluded to, what the aims of that requirement was when the auditor reporting standards were developed, how that plays into the overarching objective in the IESBA's final proposals, the different options that may be available to accomplish such disclosure, as well as the pros and cons of those disclosures. I also just need to flag that the other thing we just need to keep in mind that currently in the IAASB standards, we don't have a mechanism other than the auditor's report to make public disclosures to users of the audited financial statements. So these are all items that we will have to take into account. But as I said, our board generally supported us exploring transparency in the auditor's report. And there will obviously continue to be close coordination between our working group, their working group, as well as at the board and at the staff level. Thank you, Mike.
Thanks, Willie. So if we go on to the next slide and really just pause for questions, pause for views in terms of what we are proposing to do on the reverting the prose requirement to application material and retaining the transparency requirement, but focusing much more clearly on independence requirements applicable to PIs. And if people have got suggestions of mechanisms for that public disclosure other than the auditor's report, I'm sure both Willie and I would be delighted to hear them.
Okay. All right. So quite a few hands are being raised, and just keep in mind that we have about 10 minutes left. So if we can please be brief. Hilda, we'll start with you.
Although we were originally in the camp of being quite reluctant to those original proposals, having considered the comments received, we can see that the compromise reached is an acceptable one. And as far as the transparency, I think what Willie said seems to be the right way forward to consider this in the IAASB. Thank you.
Thank you. Greg, excuse me, Greg Ruthman, please.
Good morning. Thank you, Galen. Just with respect to the reduction of the requirement with respect to firms being required to consider whether or not other entities are PIEs. Personally, for the public sector, I found that the way it was initially proposed was quite elegant. In the public sector, excuse me, there are not many entities that qualify as listed because they're not issuing shares generally on a publicly traded market, but they are issuing debt from time to time. And the current definition of listed entities would scope in those entities as listed. But I did feel that the way we were asking auditors to consider whether or not other entities should be considered a PIE was a very elegant way to capture other entities operating in the public sector where the application of public interest entity requirements would be meaningful and relevant to the users of the financial statement. So I can understand the way the text has been changed to address the respondents' concerns, but I was quite supportive of how it was originally authored. And I just wanted to bring in the public sector perspective on that.
Thank you, Greg. And Robert DiTilio.
Yes, thanks for the presentation. Well, it looks like you're kind of putting the question to us, but in terms of if it's not in the disclosed in the audit report, what would be the option? To me, that's, I guess just my opinion, the audit report option seems to be the sort of cleanest, easiest way to do it. What would the other, I know you're asking us, but what would other ways to disclose be?
I mean, we did when, perhaps I'll just revert very quickly on that one. We did when we did the fees project, talk about other mechanisms for public disclosure of audit fees. So there are a number of examples we gave there, things like transparency reports or websites or anything else. I think, again, I think it's the IAASB's ambit to deal with this one. My own perspective is that if you're going to say in the audit report that you are independent with respect to a standard, I don't think it's a great leap to actually say exactly what that standard is.
Agree.
Thank you, Robert. Anything else? No? Okay. We'll go to Asha then.
I just want to make a small comment here. I support the transparency requirements, and I don't see there's any issues if disclosures are made in the audit report itself. My concern is on the requirement for the auditors to determine the PIEs. On that ground, on that aspect, as a regulator, although I'm supportive of that fact, but where jurisdictions where the PIEs are listed by the law itself, like in our case, so when so it will be difficult for the auditor to, because when the law says that these are the PIEs and the rest of it are non-PIEs. In fact, we also have two sets of auditing standards for the PIEs and the non-PIEs. It's in the form of guidance. So I think there will be some legal concerns that we may have to address if the auditors are required to determine in any additional PIEs. Thank you.
Thank you, Asha. Natasha?
Yes, thank you. Yeah, so Asha's articulated one point which I'd support. The other two comments I would have from an investor's perspective, I suppose, but actually more even from the public interest perspective, is the point made about the transparency disclosure just being in the event where the entity has had the PIE standards applied, but no disclosure in the event where those high standards are not applied. Now, I understand that would be implicit, and if one lives in the world of auditing, therefore very obvious, but I think for most stakeholders out there, they wouldn't pick that up. And so I actually think it would be quite important to explicitly say, we have not treated this entity as a PIE, so therefore have applied the lower standard. Because as I say, if you're not an auditor and if you're not in this world and know all these detailed standards, you'd have no idea that that was the case. And I think therefore, from a public interest perspective, it's important to make that disclosure very clear. And likewise, I think it being in the audit report is the obvious place. Thank you.
Thank you. And Wei Ming?
Thank you. Thank you, Galen. Just a quick comment. I support the transparency requirement to focus on disclosure of independence requirement. requirements. I encourage IESBA to continue working with IAASB on identifying an effective way to fulfill the transparency disclosure requirements. And I also would like to echo what Natasha said. It's the disclosure should be two ways, those who applied and those who do not apply. Otherwise, the readers will have to guess why it does not see. Thank you, that's all.
Thank you, Wei. I'm going to add my opinion. I believe that I would support transparency in the audit report, and it should be explicit as to what standards are being applied. I know Dr. Chen is wanting to weigh in. I see your hand raised. However, if you can hold off for a second, give Mike a chance to respond to the comments that were made, and then I'll invite Chairs Tom and Stavros if they have any final comments, and we'll try to wrap up this session close to on time, but feel free to, if we have to go over a few minutes, I don't think anybody will mind. And then we'll also hear from Dr. Chen at that point.
I mean, just picking up, I think, Natasha's point, one of the pushbacks we got on any form of transparency was you require some knowledge of what it means if you're going to say you've applied the PI standards. So when you say that if you have no understanding or you're not an auditor, you have no understanding of audit requirements, etc., it's confusing. I'm not sure you gain an awful lot by spelling out you've applied the, quote, non-PI standards. We can reflect on that. I'm not sure how you would express it. I think if you just say you've applied the IESBA code and you don't make reference to PIs, I think it would be rapidly assumed that that was the position. I do think, if I reflect correctly, Natasha, and you may know better than me, but I do think with the FRC's standards now, they make reference to when they've applied their PI level requirements. They don't require you to explain when you haven't, so to speak. So in other words, they only make it specific if you've applied them. But it's something we'll think about and look at. But it's merely a question of dealing with it the most elegant way, frankly. I don't think either of us is arguing about the need to be clear as to which one it is. It's what is the most effective way of doing that without overburdening the audit report and allowing for the fact there needs to be some basic understanding of what those differential standards are in order to make sense of it anyway.
Mike, did you want to wrap up at this point your presentation, and then maybe Willie as well, if you had any other comments?
Yeah, I can do very quickly. I mean, the only other bits we were going to cover, we were not proposing to make any large changes to, and people were very supportive of that. The only other open question we've got is effective date, which we've still got to discuss with the board. At the moment, we're proposing December 15, 2024, which seems a little way off at the moment. Obviously, early adoption can be done. And quite a lot of bodies effectively have already done the job anyway. But this was to allow, if you like, time for those jurisdictions which haven't yet done it to deal with what they need to deal with. But if people have got strong views on the effective date and they want to express them, happy to hear it. Otherwise, that's all I wanted to say. I don't know whether, Willie, you want to add anything?
Thank you, Mike. No, just thank you for the feedback on the various issues that we discussed today, and maybe just a final comment on the last point that Mike addressed in response to Natasha's comment is, remember I did refer that when we explore transparency in the auditor's report, there may be different options that we need to look at in terms of how that may be accomplished. And I'm sure, Natasha, the scenario that you've raised will obviously also come up, and we would seek input from our stakeholders on that. Thank you.
Are there any strong feelings from the CAG about the effective date? No, I don't see any hands raised. So at this point, Stavros, Tom, would you like to add anything? Stavros, you're on mute there, bud. You're still on mute. There you go.
I'm okay now. Thank you. I only want to say that I heard many very constructive comments on the proposals of the task force. This is and has been by definition a very difficult project, and we're really trying to break new ground by setting out a framework for local standard setters and regulators. This is the first time the IESBA does that. And of course, we have to be careful and wise as to how far we go with that. And I have a feeling that the members of the CAG agreed and seem to be converging on these views. The other thing is that, of course, you have, I think, as a CAG, the CAG has received very favorably this very coordinated thinking and coordinated presentation you've seen. And I want to thank Willie and Mike, of course, for this very well organized, coordinated presentation. Thank you all very much for your good comments. We will take them back to the board next week.
Tom, did you have anything?
Well, not surprisingly, Stavros stole all my thunder, but I just want to echo Stavros's comments. Thank the CAG for its input. Obviously, this is a project we have placed high priority on, and it's really useful to hear the different perspectives. And thank you to Mike and to Willie for presenting as well. And I look forward to our upcoming board deliberations on this topic.
Thank you, Tom. And it's so at this point, our PIOB observer, Dr. Chen, you have the floor. Your comments.
So thank you, Chairman, and thank you all for your offer me some time to talk about something. I know it's due for the end of the session. So overall, the proposals of the TF to retain requirements as approved by the IESBA in the ED, including in retaining the overarching objective and the broad approach to defining PIE, is responsive to the public interest and to the general support received from different stakeholders by respondents. I observe this is confirmed by the CH at today's session. With regard to the category of PIE, it is commendable that the TF proposals that aim to strike a balance to retain the objective agreed by IESBA of establishing an expanded global list and addressing concern such as risk of consistency among jurisdictions, heavy reliance on local bodies, risk of removal of entire categories, and the implementation challenges in jurisdictions that have a robust legal definition of PIE. However, the proposals to remove entire categories D and of E from definition of PIE does not seem to be responsive to public interest or the consultation. As stated in the PIOB public interest issues list duly posted onto the website late last month, it is encouraged that IESBA further assesses this proposal considering the factors that IESBA agreed in paragraph 400.9. As many entities in those categories would meet the factors to be considered a PIE, and many respondents supported their inclusion with some clarification or guidance. In terms of the role of firms, further and thoughtful consideration should be given to reverting back to AM, the requirement for firms to determine whether additional entities should be considered PIE, acknowledging that public interest may still be served with the application material in combination with the requirement of firms to apply professional judgment in application of the code, as well as requirements in the ISQM to determine if additional independence or quality management requirements should apply to high-risk clients, it could be questioned that the true rationale behind the decision to revert back to application material is to satisfy firms. In addition, if the IESBA finally reaches the decision to remove pension funds and collective investment vehicles from the PIE definition, the requirement for firms to assess if PIE independence requirements are applicable to other entities would become even more relevant and necessary to ensure that entities that have public interest characteristics are treated as such. IESBA should consider the impact of these two revisions in combination, as it could weaken the provisions leaving out entities that have significant public interest. In addition, I noticed that, as is stated in the beginning of the session, the consultation received 69 comment letters, of which non-MG members, except for IOSCO, provide comments. Even more, no investors have participated consultation while being approaching to the date for finalization of projects. Additional consultation process might be needed to make that up. Finally, I would like to take the response on the issue of translation as is from a non-native English language jurisdiction. I appreciate very much the translation issue being considered by the team. What I want to draw your attention to is the term of financial condition. I am not sure what is the case in other regions, but in Chinese language, Chinese translation for the term of financial condition and the financial position is the same or just similar. Or at least it is difficult, if not possible, to get the Chinese character differentiating the financial condition from financial position. Anyway, it's not a big issue. Same about, I just want to expandify that translation is worthy of consideration along with the process of standard setting. So thank you so much for your patience. Thank you.
Thank you, Dr. Chen. So at this point, I'll revert to Jim Dalkin to wrap up our session.
Thank you, Galen. And thank you for everyone for participating. This concludes our morning joint session, and I appreciate all the discussion. We will reconvene, confirm on the schedule here for those in the IAASB. That meeting will begin at 8:50, so we'll have a interim break, and I'll see everyone soon. Thank you.
Thank you and goodbye.